Hi there, welcome to Neppy Invest and welcome to a standalone answer and question video. This is from Chap Liquid 8968 who asked two questions. What does market cap mean? And does the amount of shares on issue have an impact on market cap? Really good questions because market cap is a really important concept to try to understand. And I do know that there are some investors out there, particularly some investors who are just starting out, don't really know much about investing and understanding how to value a company, that sort of thing. And all they do is have a look at the share price of a company and determine whether a company might be cheap or expensive just based off the share price without knowing anything else. For example, they might have a look at the share price of Telstra, $3.50 or something like that, compare it to CSL, share price 240, and just think straight away Telstra must be much cheaper than CSL because the share price is significantly lower. Unfortunately, it does not work like that. They also believe the share price of a company is 1 cent, it must be really, really cheap. But it's much more complex than that. And the whole reason I mentioned that ties back into the definition of market cap, because market cap is simply the amount of outstanding shares or shares on issue times the share price. So again, the market cap of company is simply the amount of shares outstanding of a company times the share price. Another way to look at this, because we do have share price in there, and if their trading is open, share price is fluctuating up and down for some companies every single second. That means the market cap of a company is trading up and down every single second, going up and down. So yes, CBA, Telstra, BHP, that market cap of these companies are going up and down every single second. So the way I look at market cap, it's just the market assigning a valuation to a company at a specific period of time, So for instance, right now it's 3:28 p.m. on the 19th of June. And if I have a look at the share price of CBA at this point in time, I can tell you what the market cap of that company is at this point in time. Now, it's going to be different in the next minute, in the next 5 minutes, tomorrow, next week. It's going to be different unless the share price has not changed, but it will change more than likely. So again, the market cap of a company is simply the amount of shares times the share price. You could say it's a valuation of a company, but I like to say it's the market assigning a value to a company because you're not including cash or you're not including debt. And in my opinion, those are the sort of things you do have to include when you are truly valuing a company. Now, on to the second part. And does the amount of shares on issue have an impact on market cap? Now, I've been pondering Chap Liquid's second question for more than a few minutes, and I've been wondering what exactly he's asking. And does the amount of shares on issue have an impact on market cap? Initially, the route I was going down was talking about stock splits and share consolidations, which actually in itself is a really interesting topic because technically, when a company does a stock split or a share consolidation, and hopefully you know what they mean, the thing that changes, and if you go back to the formula for markup, it's markup equals amount of shares times share price. And in a stock split, in a share consolidation, the amount of shares actually changes significantly. That's the whole point of doing either a stock split or share consolidation is to change the amount of shares. And in those situations, technically the markup should not change. It's a share price that should change. So the share price of a company might go up by 50-fold or down by 50-fold, depending on whether it's stock split or share consolidation and on what terms it is done at. We have seen this plenty of times, not only on the ASX, but also on overseas exchanges. In fact, many of the tech companies in America go through stock splits all the time. And one of the arguments they do stock splits, and this is the really interesting thing. One of the arguments they do stock splits is to make the shares of a company more attractive to retail investors because many retail investors equate the share price of a company, again, back to whether a company is cheap or expensive. So, for example, if NVIDIA went through a stock split. What is the share price of NVIDIA now on the 19th of June? I can't remember. So the share price of NVIDIA is currently, it's only $145. What's the most expensive one here? So, for example, Facebook is $700. And maybe the Facebook management go, oh, we want to entice more retail investors into a company. So do a 10-for-1 stock split. So increase the amount of shares on issue by tenfold, but the share price should technically go down to $70. But sometimes what you'll see is the share price will rally well above $70 because people go, oh, it's cheaper now. It's not technically cheaper. Anyway, so I was going down that route talking about this particular question, but I'm not sure exactly that was what Chap Liquid was asking about, because does the amount of shares on issue have an impact on market cap? So then I was thinking that whether there's any relationship between the amount of shares of a company and the market cap. And there is no relationship at all, because I've seen some really small companies have a massive amount of shares on issue. I've seen some really small companies have a really low amount of shares on issue. And I have seen some really big companies have small amount of shares on issue, and some really big companies have a really large shares on issue. So what I'm going to do now is I'm going to ask ChatGPT whether there is any relationship between the amount of shares and market cap. I'm doubtful, but I could be wrong. Okay, so I've asked ChatGPT two simple questions. First question was not good enough because I asked it, is there any relationship between shares outstanding and market cap? And as soon as I hit the return button, I knew exactly what was going to happen. It said, yeah, there is a direct relationship because I already gave that formula. The market cap equals share price versus shares outstanding. So I've already talked about that. So there is a direct relationship. But what I was trying to get at, and mind my spelling, I said, no, do big. Yeah, don't look at my spelling there. I was, typing without sort of looking. Great question. Thank you, ChatGPT. It is a great question. And the answer is not necessarily. There is no fixed rule that says big companies must have large number of shares outstanding or that small companies must have a small number. Instead, what actually matters is market cap equals share price times shares outstanding. They do have some examples here. Berkshire Hathaway is a prime example. I'm so happy they brought this one up. Berkshire Hathaway has a share price of 636,000 there, Class A shares, and they only have 1.35 million shares on issue. Compare that to Apple, have 16.2 billion shares on issue, CSL 464 million, Zipco 1.25 billion. I'm not sure why they had those two, but yeah, so Berkshire is huge, but has very few shares, and Zipco is tiny, market cap 500 million, but has massive number of shares on issue. So why the difference? Companies choose how many shares to issue, stock splits and reverse splits, and also some companies prefer high share price, others want more liquidities. There we go. So nice little rundown from ChatGPT, and very important is how you phrase your prompts in ChatGPT. As you can see from my first one, just not good enough. It's my mistake, not ChatGPT's. So anyway, that is, I think, the answer to your question. And that's it for this particular video. If you have any more questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.